Hi guys, today we are going to tackle the use of accurate trend lines. I'd already set my own, but I can do it from scratch. Um, Basically, your trend lines act as your perimeter fence. Your perimeter fence is, of course, your fence for your compound. So it shows you in a simple fact how far or the extent or the vastness of your compound. The same thing happens with price. You are able to use trend lines to also tell you how far price has moved within a given period of time. So you take your first trend line and I'll show you the difference between when you ignore these things called wicks and when you accommodate them. So there is the approach of using the line chart. The line chart shows you where the candles close, which is now the one where it does not accommodate the wicks. So you come here, you change it to the lines, then you draw your trend line from there all the way to this point. You can also extend it, pulling it that way to that point. If you want the identical line of that size, you side click and you say clone, it gives you an identical one. And then you just drag it to the points you deem fit. Now, when looking at this, you will see that it is touching points. But now where the problem comes is when you revert back to using candles. This is where you'll find things like stop losses, stop loss hands manifest, because you have just, the line chart again does not cater for the wicks. So a place like here, place like here, even a place like this will still have wicks. Believe I will mark every place and then we confirm whether it has wicks here and there. Now, when you change to candlesticks, you can see most of, with the exception of here, there's a wick here, there are wicks here, here, and even here. So, for instance, if you were to enter a position, let's just forget for now that this is the daily. Your level was here. You wanted to open a sell position using just 30 pips, but because this is fixed, everything is in the thousands. So let's say 2000. Already your stop loss would have been hit, and yet this is the end. This is where the candles stop. So this is where now you see enter a trade and then it hits your stop loss. It's because when you stick to the line chart too much, this is now what happens. The other thing is your trend lines also help you to be able to know. For instance, let's see these instruments as a person. They're able to tell you where their behavior change is going to happen. For instance, where the sell movement or the bearish movement will move and change. Like now from here, from this point, where it touches the diagonal support, it buys. Where it touches the diagonal resistance, it sells. So happy, sad, happy, sad all the way, almost touching this diagonal support. Comes back again, touches here, shoots back up, goes back again to touch it because it missed here, touches it, then comes all the way down. So that is another function for trend lines. It's able to tell you the level of excitement or emotion within this person, called wicks 75. The other bit was there was a question that was asked about the best time frames. The best time frames is basically, if for example, somebody mentioned the daily, the H4 and the H1. The time frames you use basically are defined by the kind of trader you are. There is the investor who looks at the weekly, monthly, the daily, weekly, and then the monthly. Those three, and then they hold extremely long periods of time, a month, 2 months. There's a person who does the daily, the H4 and the H1, which is an intra-trader. There's the person who now goes between the H4, H1, 15 minutes, and then there's the 15 minutes, 5 minutes, 1 minute. Now that is within the scalping range. The people who do daily to daily, H4, H1, those are intraday traders, sorry, and swingers. Now, the other thing is, why do we do that? We do that because even when you meet a person, there's normally the first impression. Same again with these things. These things, the broader or the bigger picture, and then now they are now the nitty-gritties about this person. So this is now what constitutes them, and then after that, you go to the H4. You get to know what makes them more happy in terms of buys, what makes them angry in terms of sales, at what points, what are the triggers for these things. So you're going looking at them deeper and deeper and deeper, and then your entry point is your H1. Now there you know the levels of sensitivity, you know the turning points. And then you have even seen things like trends in trends, how somebody can be smiling, giving you a plastic smile, but inside they're hurting. You're able to see all that still on the charts. Now, something I forgot to mention, I've moved this trend line from cutting through the wicks to accommodate them as much as possible. So I've catered for here, I've catered for here, I've catered for here, and I've catered for here. The other thing is, there was a question about approaches to deal with small accounts. The best approach is if you have a $10 or $20 account, please go to instruments that have small pip values. Pip values meaning the value it has as it moves. Don't go for things like wicks 75. Go for things like wicks 75 1S, wicks 25, wicks 25 1S, such things, so that you're able to grow your account gradually. And then now you can now jump into these other instruments. There was also another question about a rectangular pattern. So there is this one here. Okay, so there's somebody who had asked me about trading rectangular patterns, and also whether it is good to wait for a retest or to just be impulsive. Now, I will give you an example. Being impulsive can be very good at certain times. If you had trying to look for a very good example of when you're impulsive. In fact, this shows when somebody is, this shows the negatives. Now, if from here you expected a sell because it has reached the ceiling, a sell. Now, this is where now you get a rude awakening, because it goes against you, and most times this candle would have created a stop loss hand, and this is because you entered here thinking it was going to reverse to the downside, and it continued going up to this level. For this it even went higher. So that's why being impulsive is not good. You should wait for the first bearish candle to print, which is this one here. Once that is done, then you have confirmation that you can continue, and then now you continue with it like that all the way. The other thing is your perimeter fences or your perimeter fences also bring about the presence of something called a chart pattern. sorry for that. So your perimeter fences, which are your trend lines, also create things called chart patterns. Chart patterns are also another thing that work hand in hand with your trend lines, because chart patterns alert you to how price is moving within that playing field and how to enter. And there are various types of chart patterns, which one can even download on Google and see chart patterns and how their entry points and their stop loss levels. Now, there was another question about whether it is safe to be impulsive. So this kind of answers your question, or to wait for a retest. A retest, sometimes you might wait for a retest and it never comes. Like now in this scenario, this is the only retest. The best is once the candle is finished printing, and then now you jump in. Even with this, it finished printing and then now you jump in with that for the ride all the way. Now for this is the only place where I'm seeing there's a retest. Sorry for that again. It was a phone call. Now, in this case, this is where there's a retest. There's also this one. And this is where now we look at avoiding the fear of FOMO. FOMO can make you go through unnecessary losses because you want to make money come out to me by fire by force. But once you lose a certain move, just let it go, because the market will always be running and you will have other opportunities. But for instance, this came to retest this level. And so that is where you find you have the opportunity to add more buys. But once it took off, then came back down, the lower your entry point, the better for you, because when it goes up, it gives you very nice profit. And then when it comes back down, the loss is not big. But if you took it from somewhere up here, you'd have to start having panic attacks because of this length of these candles. And then eventually it goes your direction. So now here I foresee a retest to this level, and then it goes, and then it goes back down in form of a continuation. And because how price moves, it's always an impulse, correction, impulse. Like this is an impulse, correction, impulse. correction impulse. So there must be a correction here. Even if it's the smallest, then it impulses downwards. Okay, so there was a question about scalping one candle, just one candle and coming out. That is also possible. That is possible depending on, there are certain instruments that have very big candles. For instance, let me look at this gold, 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 gold. Yes, this guy called gold. So gold also has some of the biggest wicks there is. So you see, if you don't accommodate these wicks, you're finished. You'll always be hitting your stop loss. So this is also a range within here. But from here, you're able to you can use the example, this example where something is very clear. You can decide to enter here, put it like that. On the retest, put your stop loss here, which would be, let's say, 10 pips, and here. So that gives you, and guys, this is a very nice tool. It tells you the pips and the percentage you're going to risk, the risk to reward. So this is 3.65 to 0.5, which is a good thing. So you can be able to scalp one candle off from this resistance to this support. So you can also do this there. But for scalping one candle, you just wait for the candle to open and finish to print, and then as it starts printing another one, you close. That's basically it. And then you'll be able to, you can scalp as many candles as you want, so long as you know the general movement is a sell. You can be able to scalp from even this point, get out here. Let me show you. You get out here, enter here, get out here, enter here, get out here. So basically that is how it's done. But for normal, for other guys, they'll just enter and hold it from resistance to support or to their TP area. And that's it. Last but not least, there was a question about what will make, what enables people know the kind of trading style. There are certain things, because trading helps to make somebody know themselves more. You must first of all have patience to be able to see these moves and wait like a hunter for them to be fruitful. That now builds on your ability to, just like the hunter, to put a trap and wait for it to get your prize, which is the meat that you want to go and cook for you and your family. And then from there, you have to have things like risk management. You have to have rules that you follow like a military person, and discipline. You don't break those rules for anything in this world. And that is for the safety of your account. When you break them, you suffer demoralizing losses. And sometimes even your confidence vanishes. You start suffering self-doubt. You see a move, you cannot enter because of the impact of your previous loss on you. So that's why you follow certain rules all the time with your strategy. It is better to lose following certain rules than just winning, doing random things, because you will not be able to know what made you win and what made you lose for certain. There will always be an if scenario when you're doing random things. Now, but when learning, even for myself, I started with this, taking trades and holding them for 4 or 5 hours, and then eventually you'll be able to jump in to the 1 minute and the 5 minutes after you have been able to train even your eyes to know things like chart patterns, their entry levels, what is a choppy market, all those characteristics. And those characteristics, to make it easy for you, that is just behavioral patterns. This child that is called gold, how does it behave when it is hungry, when it is happy, when it is angry, when it is sleepy, such things. So now that helps you make it easier for you to understand each and every instrument. And then you'll be able to pinpoint the instruments that you understand the most, or you have mastered, or they flow according to how you want them to. Sorry for that, there's a lorry passing. And then now from there, that is now the instruments that you'll be trading full time, instead of having 10, 20 instruments, because you'll not be having all the time to be able to handle all that. But when you zero down, then you become a specialist in certain instruments. So you have to learn from this, from that process. Then you'll be able to go to this, I call them micro timelines, which are now timeframes, which are now the 5 minutes, the 1 minute such. And then now you'll be trading and making your money quickly. So guys, that is the end of our session. In case you have any questions, feel free to contact me on my Telegram handle, Your Father's Father, and I'll be happy and willing to answer your questions. Have a nice day.